Alonzo says, Dave, your idea with long-term care sounds like flood insurance and FEMA. My mind can't think about that right now. So maybe, yeah. I mean, either you get it when you can, and once you can't get it, then you lost it.
Well, and that's and here's the thing about this is a lot of people, they don't even think about this, and like you said before, they don't really want to think about it, but they don't necessarily think about it until their parents have gone through a situation that wiped them out of most of their assets. And then by that time, let's say, the kids are in their 40s or 50s or, usually probably mid 40s, early 50s. And, by that time, maybe you have a couple of health conditions that maybe they rate you up for, or you might have trouble qualifying to get long-term care insurance, or the rates at that age are going to be excessively expensive because you're only 10, 15, maybe 20 years at most, potentially from needing long-term care insurance yourself and the company having to pay claims on that at whatever rate it is. So, by the time most people start thinking about this, it's difficult to even pay for because the premiums become so high because these insurance companies, they know that, most likely you're going to file these claims at some point. And so, they have to price it accordingly. And so I would say planning for it as young as possible is good. You don't want to get it when you're in your 20s or something, but, late 30s, early 40s, something like that. So that way,
there's actually a tax break as early as age 40. You can actually get a tax break for buying a tax qualified long-term care policy. Now, I will talk a little bit later about the difference between a tax qualified, what real long-term care is versus a chronic illness or an annuity doubling thing, because I'm afraid that because they seem to function similarly, that they're going to be assumed that you've covered it, but they're two different things. So I will cover that. So Alonzo says, plus not enough agents sold long-term care, maybe. So it's not a large enough pool to remain solvent. That's part of it. I mean, it's an uncomfortable conversation to begin with. And yet, and as and we notice this all the time. Whenever there's a death, people say, did they have life insurance? Everybody wants to collect. Very few people want to pay in advance. This is a character sale. This is something that needs to be addressed in advance. So, like Mike, you were saying, you're not thinking about it until 10, 15 years from now. Now your parents are in that situation. Oh, did they get long-term care? Oh, yeah, because you're ready to collect on it. Who did the planning in advance? Did anybody do that planning in advance? And it's troubling